Hello, Professor. So today we are going to present on our investment portfolio report. Our group member consists of four members: the Rohit, Parmit, Kajal, and myself, Sujan Shrestha. So going towards the next slide. So let's talk about the investment mix. So we have presented two figures. The first one is investment mix based on company-wise, and the second one is investment mix based on sector-wise. So if we talk about the sector-wise, the technology part, the technology sector almost covers 33% of our funds. That means technology sector is at the peak. And the second one is automotive part, which holds almost 21% of our funds. If we talk about the lowest one, then real estate and health sector, which both holds 8% of our funds, and it's at the lowest point. So if I like to present it in a small way, then technology sector holds 33% of our funds, and health and real estate sector holds 8% of our funds. So now moving towards the investment mix based on company wide. So we have invested in altogether 11 companies, and out of all, Microsoft, which belongs to the technology sector, hold the most proportion of our funds, that is 23%. So there is Tesla, which belongs to the automotive sector, which is just 2% below the Microsoft, and it holds 21%, and it's the second highest. So again, talking about the lowest one, then there is CVS, which holds only 2%, 2% of our funds. So the next is talk about risk tolerance profile. Okay. So if an individual or person or investor wants to use our investment portfolio, then what kind of profile this will have? What kind of risk tolerance profile this will have? So the risk preference, it should be aggressive in nature, and risk capacity, it should be high risk capacity taker. And the risk attitude, it should be risk neutral. So the next slide will be presented by Rohit.
Hey, thanks, Sujan. I would like to explain about the risk in this investment portfolio. We all know that all the investments in stock market are subject to market risk. There are always two sides while investing, whether there is a loss or profit. This investment portfolio has a standard deviation of 30%, which shows that this fund is aggressive and has a high risk tolerance profile, and there are high chances of losing and gaining money by investing in this stock. The risk rating of this fund is between medium to high, but in order to generate more returns from the market, it is necessary to take risks. Overall, the risks will be managed by rebalancing of the portfolio after reviewing the market conditions from time to time. And now I would like to talk about the performance of listed company stocks with respect to their sector index. This helps in knowing about the stock performance and its relation to sector index. If the covariance between both the company stock and related sector index is positive, then it means that if sector index increases, the stock price will also increase. And in this investment portfolio, Microsoft, Tesla, and Lockheed Martin is having the positive correlation with the sector index, whereas other listed stocks are negative because they are at 52-week low prices and there are high chances that these stocks shoot up again. So this is all from my side, and now I would like to ask Parmeet to present her part.
Hi everyone. So firstly to discuss about the investment style, we have considered two styles, that is growth investing and sector investing. In growth investing styles, investors always look for growing their money by looking for high earning growth rates and expanding market shares. Whereas in the sector investing market, investors investors prefer to invest in the market that is believed to outperform in the future. Moreover, this investment style is suitable for those investors who want to generate income and long term capital growth and are able to invest the money for a longer period of time. Going forward to next slide, that is macroeconomic analysis. In this the in this analysis, we have taken the variables at the macroeconomic level and explain their effect on the stock market. Firstly, to discuss about GDP. In 2023, the GDP growth rate will lie between 1.5% to 1.7%. The stock market fluctuations the stock market fluctuates due to the changes in GDP. If the GDP is negative, the stock market will fall and it will indicate the recession in the economy or vice versa. Moreover, the current US unemployment rate is 3.70%. Unemployment rate is also negatively affects the stock market as people who do not have income, they spend less, which affects the company's profitability and which causes the shares to drop their prices. The next is inflation rate, which is currently at 4.05%. When the inflation rate is slow to moderate, means it lies between 1 to 3%. There is minor effect on the stock market. However, any increase more than this can cause uncertainty in the market. Lastly, the interest rate in the US market is 8%. Stock prices as well as stock market are negatively affected by higher interest rates and vice versa. So for the next slide, my friend will discuss about that. Thank you.
Hello, everyone. So when we talk about investment and portfolio management, fundamental analysis plays the most important role in this case because fundamental analysis lets us know that whether we should hold the tax or whether we should hold the stock or not, what amount of profit or in which time duration the stock will give us the profit because fundamental analysis is the analysis of business financial statements. So here we have mentioned some important fundamental analysis like market capital, earning per share, price earning, FCF payout ratios, FCF yield, earning yield, quick ratio, current ratio, and also we have mentioned the analyst recommendations out of five. So basically, these recommendations are the recommendations out of five for the mentioned stocks which are recommended by the analyst, and all this helps us to analyze the stock, and in long term it says us that we should hold the stock or not, and what amount of certainty we have to earn the profit. And on the next slide we have mentioned some insights score. Next slide, please. So in this slide, we have mentioned the insight score like dividend growth, analyst, financial health, profitability, management. In this, there is a calculation of like if the stock is average, good, very good, or bad in the mentioned sectors like dividends, growth, and etc. So here we can see that few stocks are average and few are overall good. So we can invest in that stock and we can earn a very good amount of profit. And that's it. Thank you for so much. And here are the company names, full forms in which we have invested our amount, and the sectors in which we have invested, like technology, healthcare, energy, industrial, real estate, and automotive. Thank you so much.